Hello, everyone. Today we are going to start a new topic that is banking. So, for any system, any economic system to be financially stable, to be economically stable, there must be banking system to stabilize the economy. So, history, if we talk about the history of banking, then it has large, a large number of years history that it started from late 17th century, and the first bank ever started in the history of India was the Bank of Hindustan, which was established in 1770. Later, it got liquidated, and the General Bank of India got established, but that also failed. So then came the oldest Bank of India, that was SBI, State Bank of India. And then actually it didn't came up under its own name. It was originated basically, and it was working as the Bank of Calcutta in the 18th century, in the early 18th century. And then it was later renamed as the Bank of Bengal. So this was one of the three banks founded by the presidency government, and the other two were the Bank of Bombay and the Bank of Madras. So these three banks were actually considered to be the primary three presidency banks which were there in this country, India. So, and after the India's independence, it became the SBI. So looking at this history, you can realize that how much it has contributed. This banking system has contributed in the history of India in making the economy sound and stabilized, and it has contributed in the economic growth of the country. So, talking about what is banking exactly, banking, it is the process by which banks accept deposit from the public for safekeeping and lending out the deposits in form of loans. So what bank does, it accepts the deposits, okay, whatever savings are there with the public, they can safekeep their savings with the bank, and then the bank lends out that portion of amount which it has accepted as deposits from the public to the public only in form of loans, or it can also lend to the institutions, financial institutions, other government or business organizations. So the bank, it acts as a financial institutions, and they accept money from public, and then they lend out this money in form of loans, and this is how they earn the revenue for themselves. So there are mainly two types of banks. There are many types of banks though, but we can just we'll be studying about two types of banks, that is commercial banks and the central bank or the apex bank. Huh. So commercial banks, talking firstly about the central bank, that is the apex bank, that is RBI in our country. So RBI is the apex bank or the main central bank that controls all the other commercial banks. So RBI, as it is the central bank, it is responsible for the issue and supply of the Indian rupee, and it regulates the entire banking system. If we talk about the commercial banks, it regulates the other commercial banks, whether it be public sector banks or private sector banks or foreign banks. So it regulates, it controls the entire system, and also it controls the entire money system. Okay. So the entire money supply is being managed or looked after, or you can say controlled by the monetary decisions or monetary policies are formulated by the Central Bank of India. So, of course, it manages the countries, the payment systems are being managed by it, and it works to promote the economic development of the country. So, uh, talking about the commercial banks now. So, commercial banks, they can be, they basically indulge in directly with the public. Okay. So, public, uh, deposits its money with the commercial banks, and then whenever the public needs money, or an individual requires money, or an institution requires money, So the commercial banks also do the task of lending loans to them. And like I said, this is how they earn the revenue. Okay, so they lend loans and on that they charge some interest. And for that interest acts as revenue source for them. So, uh, so I have already told you before that the loans they act as the assets for the commercial banks, and while the other form of deposits, the primary deposits I'm talking about, they act as a liability for the banks, because at the end of the day they have to pay back those deposits because it belongs to the public, and public has just deposited or safe kept that in their savings in the commercial banks, and not given their savings permanently to the bank. They have just been safe kept there. So coming back to the functions of commercial bank, so commercials are the commercial banks, they actually have many functions. So there can be primary functions, secondary functions. We can categorize these functions in this manner, or you can just look all the functions in general. So I'll be talking about all the functions in general which all the commercial banks act in. So functions are: first, accepting deposits. So first job of the commercial banks is to accept deposits from the public. So they accept deposit from the members of the public in form of current account or savings account or fixed deposit account. So these are the functions of commercial banks, that they accept the deposits from the public, and they can be in form of any account. They can open any account with the bank, and like this they can deposit their money with them. Such accounts help the individuals to move their money safely. So the individuals, they have their thought, they are motivated by uh, keeping their deposit with the bank instead of their home, because they find it to be a more safer place. Okay, so there is a risk of theft. There is a risk of theft continuously, which is bothering individuals if they keep a lot of cash at their home. So that is why they think that it is a more safer option, it is a more securer option to keep their savings in the bank. And on that savings, they obviously they earn certain portion of interest as well, so why not? Okay, so accepting deposit, that is why they you know provide their deposits, they provide their savings to the bank. Then next is provision of loan facilities. So as this was one of the primary functions, that they accept the deposits, this is also one of the primary functions of the bank, that they provide loan facilities. They provide loans. Then loans can be of short, medium, and long term loans, depending upon the nature of loan. But then they provide loans to the public, and on that loan they earn the interest, and that is what acts as an income for them. So these are the two primary functions. Then looking at the third function, that is provision of safe means of payment. So obviously these banks, they are providing means of payment such as checks, bank drafts, credit transfers, and electronic fund transfers, that is through NEFT and RTGS. They provide these types of facilities or provisions which helps in making the payments easier for the public. Like through the issue of check, you can very easily transfer any sum of amount from your bank to the other banker means the other individual who is having any other bank account or the same bank account. Needless to say that, but it has become very easy for you to transfer the money, you know and also the bank drafts, the credit transfers, or efts are much easier way of transferring the payment, that is electronic fund transfer. There you can just sit at your home, and with the help of the internet you can just transfer at a very short while, you can transfer the money. And in case of RTGS, your fund will be transferred then and there on the real time basis. And in the case of NEFT also, your money will be transferred after a while. So कहने का मतलब है that these forms of payments will become very easy for you. So who is making it easy? The banks only. So that is why the provision of safe means of payment is there. It facilitates safer means of payments. Then comes facilitates foreign exchange payments. So any exchange payments that are being there, if you have indulged into any international trade, or if two business institutions are they are doing some international trade with each other. So you are here in this country and the other business organization is in another country. So if there is any foreign exchange payment that is due to that person, that individual, or that organization, then banks play a role. They help you in converting the currency, and also they help you with the transfer of money. So they, and even they make payment on behalf of their customers. So if you'll be a client, if you know if you have a business organization which continuously, you need to import from the foreign country. So if that is a regular practice, then banks also indulge in between and they act on your behalf. And for that clientage, obviously they'll charge certain amount, but they will help you in making the payment or receiving the payment very smoothly. Then provision of safekeeping of valuables. Obviously, they provide locker system in which you can keep your valuables, your money, your other jewelries and other valuable items at the bank at a fee, of course. So they'll be charging certain fee for whatever facilities they are giving, and but at a very low and minimal fee, they will provide you such services. Then discounting bills of exchange. So if you have any credit bill which you need to, discount, or you need to take money for, that is, if you have given your product or service on a credit basis, then if you're a seller, you can go to the bank and discount that bill before the date it is due. So if you want to, you know, take out the money prematurely of that bill, then you can do so, and bank will facilitate it. How they will discount your, not only they'll discount your bill, but they'll also actually providing you money that was due to you after a certain period, and they are providing you pre-hand. Okay, so obviously they are going to charge certain discounting charges. So apart from that, they are actually providing a service of discounting bills of exchange. So this is what you need to keep in mind, that this is a facility that they are providing. So if you're having any bills of exchange or promissory notes, so they are going to provide you at a discounted price. That is, they'll deduct the discounting charges and then they'll provide it to you. Next is provision of financial information. So they advise their clients on financial matters affecting their businesses, such as investment option and wise use of loans. So obviously they are going to provide these management and whatever you want to, whatever service you want to have from them, like investment related or financial related, or even sometimes in the technical matters they will help you. Especially if you are a big client, if you're a huge business organization, and you have kept a huge sum of money in the bank, or you are making transactions on a daily basis. So if you're a business firm, especially, they are going to help you. They'll be at your service when you'll be requiring them. If you'll be needing any financial, non-financial advices, they'll be helping you. So depending how much you are attached to that bank, or your association with the bank in form of the business you're keeping, so that will be acting as a financial help for you. Then money transfer. So any type of transfer, like I said, they facilitate the payments through checks, the banking drafts and EFTs and so on. So like this, it will become very easy for you to transfer your money from one place to another, and it is being done with the help of just, with the help of the bank. Very easily you can transfer the sum, or even sometimes banks, they act as a guarantor. So in that case, like in case of letter of credit, when you want to import something, so you need to give the person who is, exporting the products to you, so, or from whom you are importing your goods. So there you'll be required to give the letter of credit to them. So in the letter of credit, your bank is going to sign that they take the guarantee of your credibility. They take the guarantee that you will be not at default later on. So letter of credit, then traveler's check. If you want to travel around the world, you can just issue one traveler's check and you can make your expenses out of that. Then credit cards, credit transfers. These are some of the money transfer facilities which the bank provides. Then comes act as a guarantor and referees. So, like I already cleared this point in the above function, that it acts as a guarantee to the customers, and it facilitates credit payments from other financial institutions. Then it acts as an intermediary. So, obviously, it is acting as a bridge between those who are saving their money with the banks and those who want the money. So, between have and the have not, you can say. No, it is very funny. This line is very funny because have does not mean that they are rich and have not doesn't mean they are poor. Okay, but still you can just understand this in this manner, that those who are having money, they are depositing it in the bank, and those who require money, they are taking or withdrawing their from their bank account. Either they are withdrawing their amount, or if they want loan, they are taking the loans from the bank. So bank is actually helping bridging this gap, and like this they act as a link between the savers and the borrowers. Then the credit creation. So credit creation is a process in which the banks are creating the secondary deposits in the market, in the money market. So while you keep your deposits with the bank, they use these primary deposits in form of supplying loans to the other parties. So like this they are actually multiplying the money supply in the economy. They are not exactly increasing the supply of money, but indirectly what they are doing is, since they are creating secondary deposits, so that secondary deposits are also flowing in the economy in a way. Like if you are taking loan, now that money is out of the primary deposits only. If you look at in the literal sense, that money has not been created overnight. So that money is actually out of the primary deposits which the bank was having. So from that primary deposits, it has lended to the customers, to the people who wanted loans. And because of those loans, people, what they'll be doing is they'll be uh, banks I'm talking about. So banks, they'll be creating a kind of extra money supply in form of loans. So in form of secondary deposits, if I talk about, they can increase the supply of money in the economy. And like this they can create credit, so that they act as a multiplier of money, if we look at in this manner. Then provision of trusteeship. So banks, they act as your trustee. So banks, it may act as a trustee for an individual or an organization, in which they can hold on a property. What is a trustee? First of all, I'm telling that. So a trustee is a person who will be holding your property. That is, will be keeping your property. You can keep your property in possession with that trustee, and later on, when you are mature or after a certain period of time, they will actually, because it was obliged, you were the trustee, or the person whom you are transferring your property to right now, they will be obliged to give it back to you after a while. Like for example, the person was actually writing, he has written in his bill, or in his so supposedly you have made a will or an power of attorney, and then you want to transfer that to your grandson or grandchildren later on, or your children later on. So whoever you want to transfer your property to in future, you can just transfer the property at this moment with the bank, and later on, when that period will mature, or that period will come, that time will come, then the bank can act as a trustee, and they can help their clients to, or the if the person is deceased or no longer there, so they can help them, the person who the property belonged to eventually, they'll help that person to regain that will, to claim on that will, okay, to claim on that property. So they can also manage the assets of the deceased client if there was no will. And even in case of no will, they can help the person to, or the person who is no longer there in this world, they can help them to manage the assets. They can help their other relatives and other people around them with the property, management of the property. So they can help in making the will, who exactly is the nominee. So this can be decided, or because they are acting as a trustee. Trustee are the people in whom you have invested your trust in. That is why they are known as trustee. So for the clients, banks can act as a trustee, and like this, they can help the clients at the time of need. So the next topic we are going to discuss tomorrow, that is the types of accounts. Thank you.